Hello YouTube, Tim Erickson here, returning for episode number 2 of our $10,000 to $100,000 challenge on Robinhood, where we are attempting to turn an initial investment of just $10,000 into $100,000 as quickly as possible. For those of you who missed the first couple of videos, I'll put links below, but please remember to subscribe to the channel so you can be updated whenever new videos come out to track the progress of how we're doing on the challenge. I do believe we will be planning some sorts of giveaways along the way as we cross certain milestones. Still kind of debating a couple ideas on what to do in that regard, but we'll make it well worth your while to subscribe to the channel and continue to follow the progress as we go. So this video will just serve as a quick update to the different trades that were made subsequent to the first video. I did start to use our option strategy, which I will get into more depth in probably my next video, but for now I just wanted to show you what we did. So the first thing that we did was, after investing our initial $10,000 in the 8 stocks seen here on the screen, what I went ahead and did is I enabled Robinhood Gold, which is their premium service. They do charge $5 a month for that, but that enables you to allow margin trading. So as you see here on the screen, it actually says I have $4,000 of buying power, even though we spent all $10,000 last time. And if we click on this, it kind of breaks it down. It actually says, well, my account only has $30 of cash, but they're willing to lend me up to an additional $7,300. Of that, I currently have $3,200 serving as options collateral, leaving me with a net buying power of $4,175. So I'll go ahead and break down a little bit more about what all that means and entails as we go along. But to start off, you'll notice that none of it is actually margin used or spent. It's all just being held as collateral, and that's important because that means I'm not actually going to be charged any interest on any of this margin. So what we have done is entered into several what we call vertical spreads. In this case, we've been doing them on puts, sometimes referred to as put credit spreads, is actually how Robinhood shows it. And again, I will do another video that will break down in a little bit more detail what all of these mean. But essentially, as you'll see here, when I entered into this spread on Amazon, I did this on 2 options. It essentially combines me with selling an option at this strike price, buying one at this one, which netted me a credit of $1.70 per share. And as anybody familiar with options knows, each contract is for 100 shares. So my one contract netted me a credit of $170 cash into my account. So for those of you who maybe were paying attention to the stock portfolio from the last video, you'll notice a couple changes here from the last video. Not that we have any new stocks, but we have actually added to some positions. And so what I did was I essentially took the credits I received from opening all of these options, and I bought a few more shares. So as you'll see here, I've actually bought 1 more share of WP Carey. We only had 17 last time. Bought 4 more shares of Bristol Myers Squibb and 2 more shares of AbbVie. And all that was done simply with the credits received by opening these option contracts. And now the goal of these option contracts, which again in the future I'll do a video that explains more in depth what's going on, but essentially what we're doing is we're being a premium seller where we're being paid cash to open them, and we're going to hope they expire worthless. So we're going to pick strike prices that are far enough out of the money that we feel relatively confident that they'll expire worthless, which is what we want, because again, we were paid money when they were opened, and that might obligate us to purchase things if the stock moves in the wrong direction from what we expect. But in the event it stays where we are anticipating it will, then the options expire worthless. We get to keep the whole credit we received, and as you'll see here, the cornerstone of my strategy is to sell a bunch of options, use those credits to then buy additional shares of the stocks I'm interested in, many of which also pay dividends along the road. As these options expire worthless, that will release the collateral that that is being held for those option contracts, and we'll be able to go ahead and just repeat the process again. And so as you will see, if you look closely at these options, most of these are expiring on April 30th, with a couple that expire a little later. These ones in May and these ones in June. And so the plan is that, come April 30th, after these expire worthless, then the next following, trading day, May 1st, we would be able to go in and open new contracts with that same collateral that's being held there now. So this is really how we're applying leverage to our account in two ways. One, just options in general are a form of leverage because you're able to, really produce outsized returns with a small amount of investment using options because you're buying a contract for 100 shares and not actually having to buy, 100 shares themselves. And then the second way is using the margin. And so instead of holding cash as collateral against these options, we're using our margin balance. And again, because the brokerage hasn't actually had to pay any of that money out yet, we are not even charged any interest on it. So a couple things you do need to be aware of as you start to employ margin, if we come over into our account summary, is there will be what they call a margin maintenance level, which is something you need to pay attention to because as we are using margin, if our account balance dips below this value, then they might forcibly sell or close some of our positions to make sure the margin is not at risk or covered. So I tend to prefer a strategy that doesn't really flirt with danger here. I like to try and keep it considerably below our margin maintenance, considerably below our account balance, just to avoid any potential risk of ruin there. But we are applying using margin and our options to apply leverage to hopefully turbocharge these investment returns so we can get up to that $100,000 goal much quicker than otherwise anticipated. So again, that was the just summary of the second day of trading on this account. In the days going forward, I plan on doing at least one update video a week on the portfolio itself and the trades that have gone on. And in those videos, I will break down a little more in depth exactly the option process that I'm using. But for now, just wanted to keep you guys updated on where the portfolio is at. You'll see we are actually slightly below our initial investment right now, and that's because we invested early Thursday morning, and both Thursday throughout the day and Friday the market was down a little bit. So all things considered, we're actually not doing too bad. I guess one example I will give you, I did actually open up one option contract on Friday that expired that same day. This was on SPY, which is a S&P 500 tracked fund, and you'll see here I received a $7 credit when I opened it, and through the later notifications, both options expired worthless. So I got to keep that $7, and the $100 that was held as collateral was released. So that is the it for day 2 of our trading, and my goal is going to be to produce probably at a minimum 2 videos a week. Maybe some weeks we'll do more if we're lucky, but at least one of the 2 videos will be an update on the portfolio. If there's a lot of action, lots of trades being made, maybe we'll do more than one, but other videos will be just more in-depth breakdowns of the options and the strategies being employed and all that, as well as maybe just some other useful information that I might find helpful. So please, again, remember to subscribe to the channel so that you can be updated as new videos come online. If you enjoyed the video, please consider leaving a like, as it will really help us to get this channel growing. And leave a comment below if you have anything to say about my strategy, whether it's good, bad, criticism, whatever. Any stocks you want me to look at, definitely interested to hear what you people have to say. So again, it's Tim Erickson, and this is my $10,000 to $100,000 challenge, and looking forward to catching up with you guys next time. Thanks.